Hello, welcome to Accounting Hub. I'm Professor George Scarpin, PhD in accounting, and our topic today is loss contingencies or provision. Why do we have two different names here? Easy. Loss contingencies is USGAAP. So if you are based in the US, it is loss contingencies. Provision IFRS. If you are not in the US, you are talking about provision. But we have not exactly the same, but the basic stuff that's our video, it is exactly the same. And by the way, please subscribe our channel, like our video, like our Facebook page, Accounting Hub by Dr. Scarpin. It will help us a lot. So thank you in advance. So what is loss contingencies and provision? They are quite similar. Loss contingency is how USGAAP calls it, and provision is how IFRS calls it. So from now on, we will call it loss contingency. Okay, so it will be easier. So if you are not in the US, every time I say loss contingency, you hear provision. Okay, a loss contingency is an existing uncertain situation involving potential loss depending on a future event. Whether a contingency is accrued and reported as a liability depends on first the likelihood that the confirming event will occur. Number two, what can be determined about the amount of loss? So, first of all, will it happen or not? If yes, are we able to determine how much? And these are two basic assumptions for all of our accounting transactions. We need to know if it will happen or already happened, and we need to know how much. If we don't know any of these two, we are not able to record any accounting transaction. US GAAP and IFRS require that the likelihood that the future event be categorized as probable, it will happen. We don't know when, but it will. Reasonably possible, maybe it will happen. Or remote, man, it will not happen, but who knows? So probable, confirming event is likely to occur. Reasonably possible, the chance the confirming event will occur is more than remote, but less than likely. Remote, the chance the confirming event will occur is light. So that is how we work. So let's have some example here. So first of all, uh, a US example. I love sports. So here we go. On 2020 NFL season, the will Minnesota Vikings, the team that I am fan, will win the Super Bowl. From now on, it is quite remote. We are on a very bad season. So, uh, on the other hand, if we go to other Kansas, for instance, Kansas Chief, they are at least reasonably possible or probable. If we go to soccer, I also love soccer. So let's go to Premier League. Will uh, Tottenham will win Premier League? Sorry, Tottenham fans, but it is kind of remote, at maximum reasonably possible. What about Liverpool or both Manchesters? Now we are talking about reasonably possible or probable, especially if we are talking about Liverpool. They are awesome. So that is how we work. And in accounting, we have the same. For instance, warranties. Oh, For instance, warranties. Uh, we sell some product. We are pretty sure that part of them they will break and we will need to fix it. So warranty usually is a probable loss contingency. However, what about some environmental accident that we will need to pay a lot of money on fees? Uh, depending if I am a college, for instance, it's quite of remote. However, if I am a chemical industry, maybe it is probable or reasonably possible. So we need to work closely with other departments. The same as lawsuits. We are litigating and we can have a loss here. So we need to ask our lawyers, guys, what is the probability of us to lose it and to spend a lot of money? Okay. And how do we report it? If it is probable and we know the amount of money, dollar or any other currency, then we need to record a liability and add a disclosure note. It is the amount of money is not known yet, but it is reasonably estimable. The same, we create some liability and disclosure. However, we will lose it. We will lose money. However, we are not able to tell you how much, and then we only disclose it. Okay, reasonably possible. We disclosure only. It doesn't matter if we know how much or not. Remote, we don't disclose it. We do nothing. Only in some certain guarantees and other specified off balance sheet. So some other uh, off balance account, then sometimes we need to disclose it, and we will have a video about that. Okay, but usually remote, we do nothing all the time. Reasonably possible, we only disclose it. Probable, we accrue a liability if we know the amount or if we can estimate the amount. Otherwise, we only disclose it. And what is our journal entry? That is quite easy. When loss contingency is accrual, loss or expense on anything, for instance, loss on warranty or warranty expense, and credit contingency, liability or provision for warranty or any other name that you wanna give it. And when loss contingency is resolved using a non-cash asset, loss, and then the asset or valuation account. So we are we will not pay it in cash. We will decrease any other asset. So we don't have a liability. We decrease the asset. And for the first one, when we pay it, for instance, we are litigating against any other company or the company is against us and we need to pay it, we will pay the liability. Or warranty, we need to pay it or we need to fix it. We also uh, debit, debit liability and credit cash or any other stuff. Okay, guys? So that's it. Thank you so much. If you have questions or comments, leave it here or email me at jscarping@gmail.com. Have a very nice day and God bless you.